Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. Lowe's, ticker symbol LOW. Now, Lowe's was also over here. So, Lowe's holds a financial outlook event and jumped 6% during the event last year. Lowe's can also move Home Depot too. Okay, so Lowe's today. Let's see. It was up 2% during regular session hours, and it's flat in after hours. It is right now in a very aggressive position, well above that 50-day moving average, and it's also outside of this price channel. And every time it gets outside of this channel, it usually comes back down. So you could almost see this as possibly a double top here, like we had over here, although this was a little more of a cleaner double top. I do expect it to pull back down into this channel. I don't think it's going to remain at these elevated levels, so just be careful of that. But let's talk about Lowe's. After issuing tepid guidance, I'll call it, for fiscal year 23, signaling that the spending boom for home improvement projects may be losing some steam, Lowe's initially moved lower this morning. Now, that knee-jerk reaction was quickly subdued as investors turned their attention to a massive new $13 billion share repurchase program. We've talked about share repurchase programs a lot here recently. That's when a company takes its profits and buys its own shares from the open market. That helps a stock to appreciate or go up. It's one way that a company can reward investors. Now, this $13 billion share repurchase program that Lowe's also announced, with over $7 billion still remaining on its prior program, Lowe's now has total share repurchase authorization of about $20 billion, providing the company with ample firepower to boost its EPS. The downbeat fiscal year 23 outlook, which calls for flat comparable store sales in a best case scenario, down about 3% on the low end, also initially dragged rival Home Depot lower, although it has also seen recovery. But both companies have enjoyed incredible runs since the pandemic hit. Lowe's and Home Depot shares have soared by 280% and 165% since mid-March 2020, fueled by rising home prices, low interest rates, and a shift towards spending more time at home. Demand for larger scale projects and smaller do-it-yourself tasks exploded. Everybody wanted a new office in their home. As inflation began to sharpen and rise this year, I wondered whether people would start to rein in on their spending on costly home improvement activities. Based on Lowe's soft guidance, it appears that may be the case. Lowe did reaffirm its outlook for fiscal year 22, forecasting revenue of $95 billion. Given that the company has comfortably exceeded analyst top and bottom line estimates over the past several quarters, Lowe's reaffirming what they're doing and posting this softer guidance. It seems a bit disappointing. Combined with Lowe's downside EPS and revenue guidance for fiscal year 23, it seems that business is cooling off from the scorching hot levels seen over the past year to year and a half. Based on the midpoint of Lowe's revenue guidance range, sales are expected to be essentially flat next fiscal year. In addition to the substantial share repurchase program, the company's attractive long-term growth prospects may also be a comfort to investors. It's inevitable that Lowe's growth rates will taper off as it laps very challenging year-over-year comparisons and as demand slows from unsustainable levels. I mean, people can't keep adding addition to their homes. That's not sustainable. With that in mind, the focus turns to the major strides the company has made in the pro area, a business that has traditionally been dominated by Home Depot. In Q3, Lowe's Pro, their sales increased by 16%, despite lapping difficult year-over-year comparisons, illustrated that its total home strategy is helping to cut into Home Depot's market share. As investors weigh Lowe's bright, longer-term potential and its new share buyback program against its soft fiscal year 23 outlook, the stock has experienced some volatility this morning. Once the immediate disappointment of its downside guidance faded, the bullish message conveyed through the buyback program was the final focal point. What do you think about Lowe's and their business? I'm sure you can agree that it's not sustainable that consumers continue to upgrade this room or that room or build a screen deck or porch or something on their house. They can't continue to expand, right? That has got to slow down at some point. And it seems like it has for the time being. But what do you think about Lowe's? Do you think their soft fiscal year 23 guidance is on par? And what do you think about that buyback program? Let me know in the comments. Thank you for watching this segment from the After Hours show. If you want to watch it live, then join me on this channel every day the market is open around 5 p.m. for the latest stock market news, deep dives on your favorite ticker symbols, and most importantly, answer your questions. Make sure to click the like button and share this video with others so we can all reach financial freedom. Thank you so very much for watching, and I will see you in the next video.